Market cools off from opening highs with banks and auto stocks coming under pressure. PSU stocks outperform. Large cap ITCs follow through buying. Mid cap see momentum with the index up nearly 0.5%.
Ola continues to electrify the street with the stock nearly doubling since listing. Market focuses on reducing losses on the e-motorcycle launch. HSBC says falling battery prices likely to boost profitability of EV makers.
CNBC-TV18 exclusive. Ahead of Motilal Oswal Investor Conference, Ramdev Agarwal says stock valuations are a challenge. Quick commerce remains a good business, but Motilal has booked profits due to stock surge in Zomato and also sees value in the capital marketplace like insurance, private banks and BFSI.
Stocks in focus. BEML rallies on hopes of more contracts as the cabinet clears metro projects in several states. Caplin Point surges after the Brazil regulator approves its plant in Tamil Nadu. Voltas gains as Nomura gives a buy recommendation on the stock on the back of expected strength in AC sales. Hello and welcome to Halftime Report on CNBC TV18. I'm Ekta Batra and with me is Mangalam Malu. Well, it is turning out to be a good session for us. No complaints except for the fact that the Bank Nifty is just about moved into the red. We're off the day's high, but the larger picture is that the Nifty is also above 24,500 as we speak. So that continues to maintain. We're just about trading with a little bit of a positive bias. Well, we do have a lot of cues lined up over the week, which we need to watch out for, especially in terms of the global front. So we have minutes from the Fed meet, which is on the 21st of August. We have the Jackson Hole Symposium, 22nd to 24th August. And Jerome Powell will be talking on the 23rd. Remember that the US markets have seen a good comeback after fears of a recession. So it'll be important to just watch out for the commentary which comes in from there. But for our markets, well, like we mentioned, Ola Electric and all of the others, really, Mangalam, it's a lot about specific stocks.
A lot about specific stocks, Ekta. You know, you did speak about some of the cues that we are tracking towards the end of this week itself. But ahead of those cues, the texture of the market is actually pretty good. Yes, we're marginally in the green for the frontline index, but if you just take a look at the intraday chart of the Nifty, as you see, you know, opened with a gap up. That gap up, given the sort of rally that we had seen on Friday, was prone to seeing some profit booking at some point in time. It did see some profit booking, but the dip has been bought with equal, ferocity. So now the Nifty is back again higher today. And despite the Nifty bank being weak, what's leading the Nifty higher is Reliance. So that big boy has now suddenly moved higher, up around 2%, up around percent from the lows, and trading with a gain of just 1% right now. So we'll keep an eye out on this stock, and alongside that, the IT pack continues to buzz. What should give bulls a lot of support is the fact that we have nearly 3 stocks advancing for every stock which is declining, and the quantum of gains are a lot more than the volume of losses that we are seeing on individual stocks as well. Let's talk about IRCTC. Now reported its numbers, a steady set of first quarter numbers. Profit after tax further aided by higher other income. Prashant caught up with the company's chairman, MD Sanjay Kumar, began by asking him about the decline in travel and tourism revenue and spoke about the way forward for the company itself. So let's hear out that management conversation with IRCTC post their first quarter results.
I am happy to inform that this quarter one is the highest ever revenue we have achieved, and similarly the profit margin this time is the best ever quarter results. But yes, all other segment except tourism has shown an increase of around 15%, and in tourism there was a specific cause that why we could not do better in this quarter is because of the model code implementation of model code of conduct during the election period. So our main product, tourism product like Bharat Gaurav trains and state trips, we could not run, and that's how it affected our revenue. But going forward, I assure you that we are doing excellently well.
Mr. Jain, there are more elections coming, as you would recognize, right? State elections, Maharashtra, Haryana, Jharkhand, J&K. So give us a sense. I mean, so for the full year, last year, that is FY24, in the tourism segment, you did about 700 crores in revenues. You posted a growth of about 24%. Could you give us a sense of what numbers could look like for the full year, FY25?
Yeah, it's a good question. Yes, election is everywhere, but whereas it gives some good business to us, like movement of election specials and all, but at the same time some business get hardened. But all these state elections are not like our general election, because in general elections the complete involvement and model code of conduct is implemented in every state. Here certain pockets which we have to avoid, but we have already entered into MOU with 8 states, and another 2 states are almost ready for implementation. So I will try to maintain the same numbers.
So around 20% growth, 25 over 24 in the tourism business?
Exact number should not be said in Q1. We are sitting, but our strategy is to maintain the same amount of growth, same numbers of growth on a year-to-year basis.
Okay. Tourism, to be fair, is not the biggest of the segments. Actually, perhaps it is the smallest in that sense. On the ticketing side, if I can sort of come to you, revenues here have gone down about 4%, again on a quarter-on-quarter basis. On a year-on-year basis, they're up about 13.5%. Could you talk about this segment? This is an important one for you.
Yeah, it's a good question also. You know that IRCTC in business which is seasonal, when chutti is there, when people are going on tourism, when children are going on holidays, then our earning, our ticketing during that period, the revenue enhance during that period. If you see the trend, it is similar. But I am happy to say that we almost maintain the same revenue which we on a Q-to-Q basis also, and around 16%, 13% growth in IT earning.
For the internet ticketing segment, sir, revenues grew 8% in FY24. For the full year FY25, what can we expect from this segment?
You see, it will be almost same, because I am telling you, we are not only seeing the convenience fee, we are working on non-convenience fee part also, which is quite a good number. Like if you divide these two earning, around 2/3 comes from our convenience fee, and 1/3 is coming from non-convenience fee. So there is a huge chance of improving this earning. So we'll maintain that.
Okay, got that. The margins in this segment are the highest for you, right? I mean, it's come in at 82.8% segment margins for internet ticketing. Will you be able to hold on to these margins? Give us a sense.
So far as IT revenue is concerned, IT margin concerned, yes, certainly it will be the same, because we are not reducing any charges. And as the number of trains are also increasing, if you see the number of tickets daily which we booked in Q1 last year, we have 11.41 crore lakh only. This time we have touched 12.9 lakhs per day. So the improvement of 1.5 lakhs passenger per day in this quarter. And as now election is over, the many rakes are ready, so new numbers of trains are going to come this season, this year. So we are likely to achieve it. I don't see any problem in this.
Okay, let's come to catering now, sir. Again, a large segment for you. Could you give us a sense of what you've seen and what should we expect? I mean, you're tying up with various aggregators. There is the Vande Bharat opportunity. But on an overall basis, what should we expect from the catering segment?
I'm also saying quite encouraging, because as you correctly told that economy is booming, rail infrastructure investment is quite a number. DFC is coming, so now the release of the capacity for running passenger trains, more and more Vande Bharat trains are coming. All these will add to our revenue in catering. Similarly, if you see our growth in e-catering, it has improved a lot, and I'm a bit I find it very encouraging that it will further grow exponentially.
What should steady-state margins in catering be, according to you? And is there a potential for a tariff increase here?
You see, these are all conjectures. If you see the history, every 5 years there is an increase in tariff. But till it is done, we should not say anything.
So is this the fifth year? I mean, what's the likelihood of an increase?
It was done last. It was done in 2019.
So we are there. I mean, we are there. It could happen, right? But as you said, if it happens, it happens. When it happens.
But it doesn't matter because we are already working on cluster. We have given we got a new policy from Railway Board in November 23, and we are already halfway through in implementing it. This is a major change from the previous policy, and now that we are giving a long-term contract for the catering. So the response is very encouraging. We are already halfway through. We have already started 100 such kitchens. New kitchens in this quarter, so I'm seeing lot money coming for on catering side.
Okay, all right. So that's the management of IRCTC looking to maintain their growth rates, and they're seeing catering as a good source of revenue going forward as well. That stock up around 1% but this has been a complete outperformer, as we know. We'll take a short break, but we'll get you a lot more on the markets, and we'll focus on stocks such as Voltas and Ola Electric, which are buzzing today. Welcome back. Well, steady for the markets in terms of at least the Nifty trading with gains. So 24,570 is where currently the Nifty is at. Just want to point out that a couple of stocks which are seeing some amount of traction include Emcure Pharma, which is a recent listing. That stock came out with numbers recently. It's up around 5% And BLS E-Services is doing very well today. That stock is up around 10% in today's trading session. It hasn't done much for the year, but nonetheless, it's doing some amount of, it's gaining some amount of traction today. But nonetheless, the other stock that we're looking at is Voltas, which is in focus on the back of a strong performance in the UCP business in Q1, which is their cooling products business, and the brokerage commentary is enthused the counter as well. Sudarshan is here with the details.
So Voltas has built onto strong gains that company had seen post strong Q1 earnings. Now stock is back at record high, and if talk about the earnings, Q1 was led majorly by UCP business, for which volume growth had come in at 67%. And for FY25, company maintains high single-digit margin guidance. As far as brokerages are concerned, most of them remain bullish on the stock. Nomura has a buy call with a target of ₹1,857 per share. It says growth outlook remains strong, and it has raised FY25 UCP revenue growth to 30% from 26% earlier, and it says priority of market share gain over margin by the company is a step in the right direction. Jefferies too has a buy call with a target of ₹1,770 per share, and it has raised FY25-26 EPS estimates by 10 to 12%. UBS too has a buy call and target is raised to ₹1,960 per share. It says company is optimistic on demand for Voltbek products in Q3 FY25 led by festive demand. MS has an equal weight call with a target of ₹1,225 per share. It says company guides for high single-digit margin in UCP business given elevated competition. Kotak too has a sell call and target is ₹1,100 per share. It says limited margin expansion and unchanged guidance indicates intense competition, but it has raised estimates by 11 to 14%. CLSA has an underperform call. Target is raised to ₹1,310 per share. It sees limited re-rating potential. Last is GS. It has a sell call with a target of ₹1,310 per share. It says margin may have limited room to surprise upside in the coming future, and sustainability of ordering will be a key for the stock going forward.
All right, take that point on UCP or unitary cooling products. As we know, it includes the air conditioning systems and the refrigeration systems for Voltas as well. The street bullish, the stock up around 4%. Remember, all of last week, it was a big mover as well. But speaking about big movers, and this one's actually the unusual mover, listed on 9th of August. Since then, it's been 6 trading sessions, and the stock has almost doubled from its issue price. We're talking about Ola Electric. They've made a couple of announcements post-listing as well. Right now, locked in that 10% upper circuit. Ola Electric, electrifying moves. Sudarshan is still with us. Sudarshan, unusual mover.
Totally. So IPO price, if you talk about, the IPO price was rupees 76 per share and it had listed almost the same price. And from that level, it almost doubled, and today it hit high of rupees 146 per share. But remember, free float is only 17% of total outstanding share. It means only 17% of total outstanding shares is available for trade. If you talk about the recent announcements, company had launched Made in India 4680 Bharat battery cell, and CEO has said he has promised faster charging and more energy storage through new battery launch. Also, it has entered motorcycle segment. It has launched roadster portfolio starting at rupees 74,999. And today, HSBC has come out with a note initiating coverage with a buy call, and target is rupees 140 per share. It says, despite our conservative view on EV, it believes Ola is worth investing in, and its go-to-market and localization efforts are noteworthy and to attract investors looking to play electrification theme in India. And its target price implies FY28 price to sales of 2.9 times and EV to EBITDA of 39 times for Ola Electric.
Okay, all right, Sudarshan, thanks very much for that. In fact, earlier today, we did catch up with Elara Capital's Jay Kali and HSBC India's Yogesh Agarwal. Let's listen in to their views on Ola Electric.
There are positives and there are negatives. Of course, being the positives, they are one of the leaders in terms of electric scooters in the country. Their ramp up has been pretty impressive. In a very short span, they have ramped up quite well on the EV two-wheeler side, and now they are going ahead with the EV motorcycles as well. But one needs to be cautious about their cell venture as well. Globally, cell prices have crashed. How much of a benefit will that cells be for their internal consumption versus peers? That needs to be looked at. The cell, stability in terms of yields is also something that needs to be looked at. And hence, once the cell manufacturing comes on full stream, how much of that really gives in terms of cost advantage is something that is, still, execution is one of the key risks for Ola over here on the cell side.
At least for the next 2 years, things will be better. And it will be driven by 2-3 reasons. One, the costs have finally started to come down, especially the battery cost. I mean, from last year, the cathode prices or costs are down almost 60% from the peak. And so that should help. And secondly, I think we've all been looking for a push factor, just pushing electric vehicles in the market, but we need to create a pull factor. And that pull factor from the customers will come when there are more options in the market. So next year, we're going to see a series of launches in 4-wheelers. And in 2-wheelers, anyway, the launches are happening more and more. With more launches, there'll be more options. And I think there will be some bit of a pull factor. It is very, very tough to electrify motorcycles. Just to give you a context, a theoretical range for a Splendor is 700 to 800 kilometers. And with higher power and higher range, it is still slightly cheaper than Activa, which is the largest selling ICE scooter in India. So I think to electrify a motorcycle, you need a much larger battery, and that will significantly increase the cost and the weight of the vehicle. So it will be a very big challenge to electrify motorcycles. Large part of the market will find it tough to electrify, which is why our estimates for FY28 are around 20%. But the good thing is even 20% from the current 6-7% means that the EV market will grow at 30 to 40% CAGR for the next 5 to 6 years.
All right, interesting commentary around Ola Electric. Much spoken about stock, especially after the breathtaking moves that we've seen in just the last 6 trading sessions itself, taking the market cap of Ola Electric closer to that 60,000 crore mark. important, as Sudarshan pointed out, to know that only 17% of the company's available equity is open for trade right now. The rest is locked in post IPO. So as the first tranche of selling comes in post, the freeze opening in on September 5, we'll keep an eye out on how this pans out. Take a short break. Come back, get you more on the market technicals. Rachna Vaidya joins in with some trading strategies. Stay tuned. Welcome back. You're watching us here on Halftime Report. Perfect time to take you through what's taking place in the markets at midday. Let's talk about the indices. The frontline indices, both the Nifty and the Sensex, are flitting between both red and green. They're off the day's low, but off the day's high as well. Why is that? Because there is a couple of indices which are playing a bit of a tug-of war. So IT index, which did well on Friday, continues to hold on in some green, whereas the Nifty bank is seeing some supply at higher levels. It's off around 400 points from today's high as well. The good part is that the mid-cap index is doing relatively better. At an index level, it's a gain of almost 0.25%. But if you look at the broader markets, the market breadth has maintained its outperformance of advances versus the declines at, a ratio of nearly 3:1. So 3 stocks advancing for every stock, which is lower in today's trading session. So from here on, the one stock that could, change things could be Reliance. Like I said, it's been trading with a gain of almost 1% over the last 14 days. It's up 3%. Can that big boy power up? If it does, then maybe the Nifty has a few more upside triggers left. For now, the option writers are positioning themselves for a bit of a range. What is this range? 24,600 put is seeing some amount of writing at a premium of 140 rupees, telling you that around 24,450, 24,460 would be a strong amount of support coming in. On the way up, however, as we move towards today's high or closer to 24,700, we are likely to see some supply. The 20-day moving average, it's an important level for both the Nifty as well as the Nifty bank. For the Nifty, it's an important support, whereas for the Nifty bank, it is an important resistance. So around 50,923, were the Nifty bank to cross that, we will see some more traction on the Nifty itself. A couple of stocks that I'm watching out for, in particular, we have Birlasoft, which is doing well, but off highs, because now the open interest positions have increased the threshold level, so the stock may re-enter F&O ban after exiting it on Friday. And the other one you're looking at is Biocon, which may actually exit F&O ban in today's trading session, and that explains why the stock is higher by about 1%.
Okay, all right, Mangalam. Thanks very much for that. So those are a couple of F&O cues to watch out for at midday. Just want to point out that there are lots of stocks buzzing around from the broader markets within the pharmaceutical space. So Caplin Point is up around 13-odd%. It's showing traction because one of its facilities got approved by the Brazilian regulators with 0 observations. So that stock is higher. And we have Morpen, which is also gained around 13-odd%. It's one of the key gainers on the BSE this afternoon at this point in time. Godfrey Philip is also giving it company, along with Angel One and Gravita. But we do have Rachna Vaidya, who's joining in on the show to discuss the technicals of the market. Rachna, hi, welcome to the show. Well, it's more about specific stocks as compared to the index, which as we speak, the Sensex has slipped into the red and the Bank Nifty is now showing a cut of 150 odd points. So how would you approach it? What are you telling your clients? Is there an index call that you're suggesting, or is it more stock specific today?
Yeah, good afternoon and thanks for having me here. Yeah, as far as the indices are concerned, what I would say is that until the last week, the resistance that Nifty was facing, especially on futures, was 26,400. Now it has taken it out very powerfully, and now it is above that well and strong. So now the same resistance of 26,400 becomes a support. So until and unless that is broken, we don't need to worry. And intraday pullbacks would be buy on dip, because the texture of the market, the overall texture of the market has now changed from sell on rally to buy on dip, along with the strong, powerful closing that we got in the last trading day. So that is how the index is readable. And as far as the call on the index is concerned, we could be taking along on the index when the index stops falling and stops giving us this pullback, which is currently on. And if it settles down anywhere about 24,400, which is a very high probability, then we enter long with a stop loss below 26,400. and 24,600, sorry. And that is how we go along with a target of 26,650 and 26,700 on the upper side. And as far as the Bank Nifty is concerned, the situation is a little weaker compared to Nifty, and this particular index needs to hold the current price level itself, which is 50,500 approximately on futures. And if that sustains, only and only then it remains positive. Otherwise, that's an avoid.
All right, the Nifty Bank is an avoid. Rachna, thank you so much for joining in. The Nifty Bank currently at the low point of trade, settling a lot below that 50,400 mark, a little around 420 points off today's high as well. So just keep an eye out on that one. What's dragging it lower has to be HDFC Bank. That's the one which has moved towards the low point of today's trading session. Also, putting some pressure, downward pressure on the Nifty Bank is ICICI Bank. So just pull up the intraday chart of ICICI Bank. You would see that from the highs, it's corrected about 1.5%, currently trudging around at the lower end of today's trading range. Take a short break, come back. On the other side, we have the management of Suprajit Engineering joining in. Welcome back. You're watching us here on Halftime Report. Let's get chatting with the management of Suprajit Engineering. K. Ajit Kumar Rai, who's the founder and chairman at the company, joins in to detail their business performance, not only in the first quarter, but more importantly, as they see it going ahead. Thanks a lot, sir, for joining in. I remember the last time you said that, because of Red Sea issues, etc., your margins could be impacted by about 100 basis points. And at the same time, you would, see some sort of improvement in the controls division over the next couple of quarters. So one quarter hence, how has the situation panned out so far? Is the pressure on margins abating, and are we seeing some signs of turnaround in the controls division?
Good afternoon, and thank you for having me. Yes, we are seeing some change in the controls division. As you have seen, for the first time, we have touched the 8% EBITDA margin, which was what our target was for the year in the very first quarter. The growth has been lukewarm, but operationally we are doing pretty well, and that's why the reason of the improved margin slightly. But on an overall basis, we have been growing pretty well. On a standalone basis, we are at about 13% growth, and even on a consolidated basis, we're about 8-9% growth, with the margins, meeting more or less what we have guided.
Okay. Sir, can you give us an update with regards to the automotive division? Because that seems to be doing well on a global level, despite what's taking place in the industry. You are seeing an inflow of orders. So tell us where it stands in terms of an order inflow that you saw this quarter, cumulative order book when it comes to the automotive division, and what you can guide on.
Yes, the automotive side of our business is doing pretty well globally. What has happened is that in the last 2-3 quarters, actually, we have been winning significant new contracts, which will go into production for the next, 2, 3, 4, 5 quarters. So what is happening in the industry is that the customer is looking at supply chain partners who can deliver products either from the onshore or from the close shore or from the low-cost destinations. With the acquisition of LDC and now that of SCS, we are able to give that perfect footprint to the customers, and that's why we have been winning a lot more contracts than the industry growth. So going ahead, although industry may not be growing, anywhere near maybe 1%, we are expecting, as we said, even in the controls division, by end of the year, we should be touching double-digit growth in that business. So there is a consolidation of vendors, and then, appreciation of the footprint that we have that has been winning us new contracts in the last few quarters. And that trend continues as we speak.
All right. So even as the fundamentals are showing signs of improvement in a couple of your divisions, right now as we speak, the stock is down by almost 6.5%. Maybe because the street is not very happy with the size of the buyback that you've given. I mean, just 1.3% of the current total market cap at 750 rupees per share leaves very little in the hands of say, retail investors when it comes to, say, the acceptance ratio. Do you think you could have done a little more? And also, are promoters participating in the same?
First of all, you must understand on Friday, the stock went up 16%. So it's just,
Yes.
readjustment of the price. So I wouldn't comment on the price at all, but it has done a good returns to shareholders over many years. In terms of the size, our first buyback has been for 50 crores. Now it's about 110 or 112 crores. The underlying, philosophy of the buyback has been that Suprajit would be distributing between 30 to 40% of the, distributable profit to shareholders over a period of time. We have been doing about 20% of that through dividends and the balance 20% through buybacks. So when we sort of accumulated 2-3 years of sort of undistributed, let's say, dividend, it amounts to that quantum. So that's what has been distributed now, in line with our assurance to the market. I think that's exactly what has happened. Price, on the day of declaration of the buyback, we have priced it almost about 45% higher than the previous closing price, which I think is quite attractive. Of course, subsequently, prices of the stock has gone up.
Okay. All right. Just wanted to get back to the overall growth that you're targeting then. You did around 8% growth in this quarter. Your EBITDA was, better. It was up 20-odd%, margins at around 12-odd%, and profit of around 15% growth. Tell us, what are the coming quarters looking like? Are you going to continue this double-digit growth in terms of EBITDA as well as profit? And is the revenue going to pick up to a double-digit increase?
Typically the first quarter of the year is a slightly lukewarm quarter in the automotive industry. It's a sort of seasonal business, particularly in India at least. We are seeing that, we are quite confident that by end of the year, we will be that double-digit, growth in business. Certainly in the standalone business, probably it will be much higher. But also in the consolidated business, including our subsidiaries, which are in marketplace, where there is no growth, largely due to the increase in businesses and the new contracts we have won. In terms of the margin profile, I think we have sort of guided that on a consolidated basis, we want to be between 12 to 14 in the reasonable future. And we are at about 11.75%. We have also guided that on the controls division, the target is to do 8%. We are almost there now. For the first time, we touched it. And on the standalone, we have been between 15 and 17% EBITDA margin. And we have been very much there in this quarter as well. So generally, I think we are in a good wicket. I think the order wins gives us the confidence that the growth trajectory and the margin profile that we have been talking about all these days seems to be, happening as we speak.
All right. So just final question before we let you go. One is on the DCD margins, which, there are hopes of improvement going forward. If you could give us a sense of how July and August have been. And the second part is on your SCS acquisition. What do you expect it to be in this year and thereafter, steady state margins? On those two factors, if you could give us a sense.
I think on the domestic cable division, please keep in mind that, it also includes the overheads of the corporate as well as our, technology center. Last year at this time of the year, we had only about 40 or 50 engineers in technology center, whereas in this quarter, it has been in excess of 100. So obviously, those are the costs that is adding. If you look at the cable division on operational basis, it is, striking the same EBITDA margins as it has always been doing historically. Now coming to SCS, I think we have only done the first phase of the transaction. Please understand that we have bought it from an insolvency proceedings. And obviously that means that they have been incurring significant losses. So this is a little bit of a longish journey, and given, a year or two, I'm pretty sure that SCS will turn around nicely and give significant, not only the top line business, which anyway is there, but also improve its margin in line with our, targets.
Okay. All right, sir. We're going to leave it on that note. Thanks very much for joining in and speaking with us. So that's Suprajit Engineering seeing some amount of profit booking after that strong run that we saw on Friday. For the markets, there's some recovery which has taken place for the Sensex. So just about flitting between red and green, you'd have to say it's a consolidatory trend in today's trade on a larger scale. We'll take a short break, but a lot more on the markets. Stay tuned. Welcome back. Well, just want to point out a couple of stocks that that are buzzing. So Caplin Point, we'd spoken about it briefly just a couple of minutes ago. So that stock is up around 13-odd%. The news is that Anvisa, which is basically Brazil's regulator, has conducted an inspection of the sterile injectables and ophthalmic facility. Inspection was between the 12th of August and 16th of August, and they had mentioned that there will be this inspection taking place in their Q1 call. Which, the week on post their earnings. There are zero observations issued by the by the Brazilian regulator, and that's the reason you're seeing the stock up around 13-odd%. Now, Latin America as a whole is majority of the revenues for Caplin Point. Brazil is an important part of the expansion plans in Latin America, the company has said. This opens the doors to the largest market in that particular geography, which is in Latin America. Brazil, Mexico and Chile are now new opportunities for the company, and that's the reason why you're seeing that stock up around 13-odd% in the past 3 months. As you can see, the stock has rallied over 35-odd%. We'll take a short break on that note, but up next, Manisha Gupta will join in with our commodities segment.
Welcome back, and joining us on the show now is Jonathan Bharat. He's CIO at Probus Securities. Jonathan, thank you so much for joining us. And yet another very strong start to the week when it comes to the gold prices, $2,500 an ounce is holding. What's your sense from here? Would you say that the rate cut in September is now factored in? And is it going to be about a day-to-day event, kind of a day where you would see news informations moving the prices?
Manish, look, it's quite interesting to come in and see gold once again at record highs. I do expect it to continue. I think the market is sort of definitely looking for that rate cut in the US in September. I think the key will whether be, we're going to get more after that or whether it's a wait and see. I do get a sense that given the CPI data that we had out last week, it did indicate that the year-on-year numbers were quite good, but I am concerned about the monthly data. The monthly data, particularly with core inflation, was up 0.02%, and that to me is something that the Fed's going to be looked at. Remember, we do have a big week this week for the Fed, so it'll be quite interesting to see.
Oh, absolutely. You mentioned about the Jackson Hole meeting, and that is where the markets will take cues from. Having said that, do you see further gains from gold within this year now? And of course, the last quarter is going to be quite important. So is the month of September. But is the gold done as highs? What is the kind of range that you're working with now?
Look, I think when I look at gold, it still looks quite well bid. From a technical point of view, we want to see maybe a blow off at the top. But at the moment, it's holding on to these gains. It's holding on to 2,500. And that gives me a sense that she will trade higher. Now, whether it's more safe haven buying that's keeping it at this level, obviously we've got concerns in Russia and the Ukraine. We've also got concerns in the Middle East. So maybe there is this movement towards gold. We're also seeing the US dollar under pressure as well. All those bode well for prices to go high. Always a bit of a concern given that it's Monday trading and the US hasn't seen what's out there. But I think it looks good. I think it looks good from here, and I'm looking forward to more gains.
All right. Any price points that you would want to mention on from the higher side?
Yeah, I do. I mean, from the high side, I think it's more to look at where we are, 25, 50, maybe even higher than that. But make a mention on silver. Silver really hasn't moved as much as gold. So I think if you're a bit nervous about buying to break to a new high on the gold price, have a look at silver. It sort of technically looks quite strong, and it certainly is nowhere near record highs. Remember, the record highs were in 2011, and that was at $50 an ounce. We're only trading, around this 25. So a lot more to see on silver.
All right. What about the industrial metals? Because it's not just silver within the metal space. We've seen other metals do quite well. For example, copper is trading at a 2-week highs. Aluminum prices have seen some strength as well. So while the data continues to be uneven within the metal space, with the kind of sell-off that we have seen, are you comfortable buying a couple of these?
No, I'm not. No, I want to sort of hold off there on the base metal markets. There are some concerns still looming out there. You are correct with that. The economic data that we saw out of the US, that does worry me. And I think that's why we might see those rate cuts. Industrial production, retail sales, all that sort of data last night was well below expectations, and I think that might filter through to some weakness in the base metal markets. One thing that will keep the base metal markets supported will be the weakness in the US dollar, because that's certainly at tenterhooks at the moment. And if we see a break below these levels, we could see US dollar under pressure, which will naturally support the base metal markets.
So what is your base case scenario in that sense? I mean, if there was a buying happening at these current levels, would you say a 3 to 4% or a 5 to 7% of gains could be on cards?
Look, I think if we see the US dollar break through these levels and it starts to trade, then I think you could see a good 3 to 5% upward move across the board. Obviously copper, but remember, copper is the litmus test for the economy, and if the economy starts to weaken, then that's going to impede any more movement to the top side.
Jonathan, before we let you go, a quick word on the crude oil prices also, because that has come off its highs yet again. This week it started on a very flat note. What's your sense on this one?
A little bit underrated with oil at the moment, because it hasn't moved given the concerns that we have in the Middle East. And I would have expected more of a lift. I actually think technically it's trading in an area that should see it actually trade a lot higher from here, which is a concern for all our economies, particularly India. So I think the dips here will be supported. It just makes me very nervous as to what's happening, in the Middle East and what's happening, with Blinken over there at the moment. And if we can't get some resolution out of there, I think there's more of a peace deal actually factored into the price rather than anything else. So we could see some fireworks there, and I'm pretty concerned.
So are we. But as you said, Jonathan, there are no shorts that you're doing right now into the market. There are perhaps some buying opportunities, not too much perhaps in metals, but silver does seem to be one commodity that could look at further gains from here. Thank you as always, Jonathan, for joining us with that. And that's all the time that we have on Halftime Report. Business Lunch will take all the action ahead.